a jailbreak. Got no time for a mistake. Any moment till the day breaks. No more time to get to know you. I've been working on a jailbreak. Keep it calm with the fast pace. Any moment till the day breaks. No more time to get to know you. Now I'm living in a dream. Now I'm living in a dream. And I don't think I'm gonna wake up. Now I'm living in a dream. Now I'm living in a dream. And I don't think I'm gonna wake up. See, I've been working on a jailbreak. Got no time for a new fate. Any moment they'll replace me. Should have tried to get to know you. I've been working on my timing. Insecurity beside me. But your taste is so inviting. Should have tried to get to know you. Now I'm living in a dream. Now I'm living in a dream. And I don't think I'm gonna wake up. Now I'm living in a dream. Now I'm living in a dream. And I don't think I'm gonna wake up. Mama, it's a jailbreak. It's a jailbreak. Mama, it's a jailbreak. It's a jailbreak. Now I'm living in a dream. Now I'm living in a dream. And I don't think I'm gonna wake up. Now I'm living in a dream. Now I'm living in a dream. And I don't think I'm gonna wake up. Mama, it's a jailbreak. It's a jailbreak. See, I've been working on a jailbreak. Got no time for a mistake. Any moment till the day breaks. No more time to get to know you. I've been working on a jailbreak. Keep it calm with the fact.
Bienvenue au code de fiscalité. S'il vous plaît, veuillez éteindre le son de vos appareils électroniques. Désirez-vous que j'effectue la lecture des consignes en anglais ou en français?
En français.
Chaque équipe dispose de 20 minutes afin de présenter son cas au juge. J'ai affiché un carton pour les 10, les 5, les 2 dernières minutes et les 30 dernières secondes de la présentation. Lors des 10 dernières secondes du discours, j'indiquerai à l'aide de mes deux mains le nombre de secondes restantes. Une équipe n'ayant pas terminé sa présentation après 20 minutes se verra arrêter afin de passer à la période de questions. Une période de questions d'une durée maximale de 5 minutes est allouée au jury à la fin de la présentation. Je tiens à rappeler au jury qu'il est obligatoire de poser au moins une question lors de cette période. J'inviterai maintenant les juges à se présenter et vous pourrez ensuite discuter.
Bonjour, je m'appelle Pierre Lafontaine, je suis comptable, je travaille chez JDC Groupe Investors.
Bonjour, Benjamin Lompré, je suis fiscaliste chez Dominion.
Marc-Antoine Reyne, CFA, directeur régional de Groupe Investors.
Jean Paquin, comptable agréé, gestion privée Groupe Investors.
Enchanté.
Bonjour à vous, la famille Grégoire. On est très content d'être avec vous aujourd'hui pour vous aider à réduire votre fardeau fiscal. Je m'appelle Marianne Boiteau, je suis accompagnée de mes collègues Patrick Lorange et Marc-André Benoît. Donc, la majorité de la présentation va se faire en anglais, mais à la fin, si vous voulez poser vos questions en français, il y a vraiment pas de problème. Voici l'agenda pour notre rencontre d'aujourd'hui. Premièrement, je vais vous faire un petit sommaire exécutif. Ensuite, Patrick va vous parler de comment vous pouvez structurer l'acquisition de PFM. Donc, premièrement, il va faire l'évaluation de l'entreprise. Est-ce que JC devrait acheter les actifs ou les actions? Ensuite, il va aussi vous discuter de la structure optimale de cette transaction-là. Et finalement, il va vous parler de comment financer la transaction. Ensuite, Marc-André, il va vous parler des questions fiscales pour PFM pour cette année, pour 2016. Et à la fin, je vais discuter avec vous de votre situation fiscale personnelle. Donc, le sommaire exécutif, premièrement, il est possible de sauver 183 000 $ en taxes en utilisant la déduction pour gain de capital pour la transaction qu'on va discuter tantôt. Ensuite, pour le changement de contrôle, il va être possible de transférer la plupart des actifs sans avoir d'impact fiscal. Finalement, il va y avoir un impact de 66 000 $, ce que Marc-André va vous discuter par rapport à PFM. Et moi, à la fin, je vais vous expliquer pourquoi Nick devrait se faire payer en salaire et pour un maximum de 123 000 $ cette année. Patrick?
Merci, Marianne. So before getting into the transaction, let's start by doing our business valuation for PFM. So we use two methods. First, we use the COMB method, maintainable earnings. So using three different multiples, 4 times, 5 times, 6 times of EBITDA, we come to around $10, $11 million equity value for the business. If we look at the net asset method, it comes up to around $7 million. We took the basic average of both of them. So we came, hereafter, the valuation of the equity of PVM is going to be $9.5 million for all discussions going forward. More due diligence work would be necessary before a transaction, but this should be our estimate. So there's two ways that we can structure the deal. Either we can go with a sale of asset or a sale of shares. As a buyer, you're going to want to have the assets. As a seller, you're going to want to sell the shares. The main reasons is that when you sell the shares, you're going to have the capital gain deduction that would be available on your capital gains from selling your assets. As a buyer, you don't want the potential hidden liabilities that come with buying the shares, and you'd like the flexibility of picking and choosing what assets you want to buy. So, I spoke about the capital gain deduction. That's applicable. Everybody has a lifetime capital gain deduction of $813,000 that you can use against capital gains of a qualifying small business corporation. Now, to do that, PFM would have to meet these criteria. One, it has to be a Canadian-controlled private corporation, which it is, because it's all in Canada and it's owned by a Canadian, incorporated in Canada. And two, and this is a big point, 90% of assets held by PFM have to be used to generate active business income. 50% of these 90% have to be in Canada. When you look at the assets at their fair market value, we realize that it's actually only 84% of all assets at PFM that are used to generate active business income. What we're going to do is we're going to purify the assets. So Mr. McShane can set up a holdco where using Section 85.1 we can transfer all of the investments at their fair market value without tax consequences on them, which would bring up our percentage of active business income assets to 96%. The 90% rule being met, PFM is therefore a QSBC. The capital gains exemption deduction is available. We were talking before about the sale of assets versus shares, so we calculated briefly the two scenarios. Under a sale of assets, and there's more details on this calculation available in the question and answer period if you like later. But also Model gives you $3.2 million of taxes payable, assuming a 45% marginal rate. Assuming a 45% marginal rate on the sale of shares, there's a whole lot less taxes because of that capital gains deduction that you can use. So, all things considered, we recommend a sale of shares, even though the buyer's going to have to accept those hidden liabilities and that potential. Just for the tax preference, it would be better to structure it this way. So we are talking about a $9.5 million business that we need to finance somehow. We know, Jesse, that your mother has indicated a certain willingness to help you in the financing. However, we've only calculated, we'll get to that later. So the 90% of the price of the transaction brings us to an $8.5 million that we have to finance somehow. Assuming that we use a capital gains deferral and that we do the payments over 5 years, which is the maximum allowed, and which would be a good thing for Mr. McShane as well, because you're going to defer your capital gain, that represents an initial outflow of $1.7 million to purchase a 90% of the shares. That's a considerable amount of money. The next 4 years, the other 80% that we're going to consider, you can get the financing either internally, through paying dividends. This is an income-producing business, and that there's going to be different ways to structure it internally. But right now, we need $1.7 million. So with your mother, we've estimated about $450,000 through non-taxable capital dividend, through the capital dividend account of the beauty company. And there's maybe the current share of the earnings, assuming 50-50 brings us another $75,000. Let's assume we can get $450,000 from Catalina. That still means we have to find $1.2 million to finance. You have $230,000 of home equity, which you could remortgage to a certain extent, get some cash out that way, but it's a lot of financing that still needs to get found. Maybe 90% isn't the amount that you should go and get in terms of equity in the business. Maybe we can get a lower percentage, maybe 50 if you want to maintain control. Maybe there's a business partner that would also be invested in coming to invest in PFM. What's important is that we get the required financing so that you're not exposed too much financially in the next big couple of years, because it's a considerable amount of money. But assuming that we can structure this transaction and that we can find the financing available, this would be the most tax-effective way to structure it. I'll explain. 1, Jesse would purchase 813,000 common shares directly from Mr. McShane, which would allow Mr. McShane to immediately use his capital gains exemption, that full 813,000 that's available. Jesse then incorporates a BICO right here for $1. She's now 100% owner of that BICO. Using Section 85.1, which is tax-free rollover of assets that's available in the law, we'll be able to transfer all the remaining assets from PFM and the shares to BICO on a tax-free basis. So we're going to sell the assets to BICO, and we're going to receive, well, Mr. McShane is going to receive in the holdco the 10% common shares that we've previously established, boot the maximum amount of non-share capital that he's able to pull out, $10,000, which is equal to the elected amount, which is the ACV of the shares. And the rest, we're going to go with convertible preferred shares that are participating and voting for the remaining amount. So there's no immediate cash outflow that comes out of BICO, but we're still able to maintain that 90% that we were looking for. Sorry. There we go. So what this does is that it allows Mr. McShane to use the entire capital gains deduction In the future, because we know that Mr. McShane, you didn't want to keep those preferred shares and you want to invest the money in the markets, your new hobby, we'll be able to either convert the preferred shares, have them redeemed for cash or for a note. Ideally, we'd actually redeem them for a note because the interest would be tax deductible for the BICO. And in the future, if Jesse you ever need cash, you'll be able to manage the dividend payments, which we know, Mr. McShane, you didn't absolutely want to have, and you want to manage how much money you could pull out of your investments and would be taxable in the current year. This system, which is a bit more complicated of holdcos and FICOs, will allow you to maximize the dividends and the cash that flows through, because under Section 112, intercompany dividends are not taxable. So even though Jesse wants to get some money out through a dividend, you can get the dividend in your holdco, but you don't have to immediately pull it out and pay it to yourself, so it doesn't get immediately taxed. So in the end, this is what it looks like. Jessie incorporates a BICO, and she's going to own indirectly 90% of the shares of PFM. Mr. McShane, you get to have 10% of the common shares of the BICO, so indirectly 10% of PFM. Also with the preferred shares that will be redeemed in the next 5 years, ideally. And through the holdco, we're able to better manage the dividend distribution. With that said, I'll pass it on to Mark, who's going to talk about the acquisition control.
Thank you, Pat. So we'll now discuss the tax consequences related to the proposed structure. So first, there will be an acquisition of control because she will now have 90% of the company. So one of the consequences is that there will be a deemed year end. The deemed year end will have some consequences, such as the losses carried forward will lose 1 year because of the deemed year end, and the CCA will also be prorated. So depending on how many days in the deemed year end will be prorated to that. Also, cannot carry forward. Right now, there's about $230,000 of non-capital loss carried forward. We have to be careful there. We need to make sure that those losses can be carried forward in the future. There's 3 conditions that needs to be met. The business needs to be carried on. Yes, it needs to be for the same or similar business line, which is in this case, all right. And there must be an expectation of profit. This year they made about $1 million in profit, which makes sense as well. However, the net capital loss, it's marginal. In this case, it's only $5,000, but it will expire at the deemed year end. However, there's a bump that can be made. This bump will be made on the non-depreciable asset, which will allow the company to use the net capital loss, and which will not expire. So now we'll discuss the corporate tax consequences related to the corporate tax adjustment. First, travel expense. Right now, they included 100% of meal and expenses. We need to make an adjustment under the law. We can only include 50% of meal and entertainment for net income for tax purposes. However, those employee or salesmen, there's a limit to the commission that they earn if they want to deduct under this system. However, so we need to make sure that it's not over. Monthly meals for employee. Again, it's the 50% deduction. Right now, they're paying $5,000 for 12 months. That's what they're paying the employee when they bring it to the restaurant every month. It's not a taxable benefit. Why? Because it's conferred to all employee. Because it's conferred to all employee, it's not an income inclusion for those employees, and it's an income deduction for the corporation. However, it needs to be reasonable. In this case, we don't know how many employees it was, but we assume it was reasonable in this case. The tuition expense. Right now, the company is paying for the tuition expense. However, in order for the company to be, in order for not to be an income inclusion, it has to be for the benefit of the employer. In this case, it's not sure if it's for the benefit of the employer or not, because the employee is allowed to choose which course he wants to take. So, we need to make sure that the company gets a receipt, and if the class is actually for the benefit of the employer, it's not going to be an income inclusion for the employee. However, if it's not, we're going to have to include that in the employee return as well. Company's car. Right now, they purchased a car of about $45,000 That $45,000 is over the $30,000 cap rule. So we're gonna put $30,000 in class 10.1, which is going to be capped. The $15,000 more is not going to be deductible for the corporation. The employee also going to have an income inclusion, which is going to be the operating benefit of this car. Right now, the employee doesn't use the car enough, so we can use the reduced standby charge. So the standby charge is 2% times the full price of the car. In this case, because it's an income inclusion, it's not capped at $30,000. It's the full $45,000 that we have to include plus GST times the number of months. It's not clear in this case how many months he used the car, so we'll assume 12 months. And also, he's going to have to include some operating benefit for the car. Right now, he can use the reduced standby charge, so only 50%. He can 50% of reduced standby charge price. He can take the lesser of, I'm sorry about that, it's 25 cents times the number of personal kilometer he's driving, or 50% of the reduced standby charge, whichever is less. Also, right now, there's no detailed log. Under the law, the employer has to keep a detailed log of how many personal kilometer is used for each car that is owned by the corporation. Now I'll pass it to Maya.
Thanks so much. Okay, so now I'm going to discuss the personal tax issues that you mentioned earlier. First, should we pay Nick a salary or dividends? Well, the advantages of paying a salary would be to increase the room for RSP contributions and also to allow CPP and QPP income at retirement. However, the disadvantages of salary would be that it is taxed at a higher rate. However, we think that Nick should receive a salary for his part-time job, because he would be working part-time, if I understand it correctly. So we should pay him a salary of up to $120,000, and the salary must be reasonable in order to be deductible. Okay, so now I'm going to discuss income splitting. It would be important to pay a salary to Nick for when he manages Jesse's investments, because it's a way to split income in this case, because you said that he was managing her investments. Also, there is a potential to use the spousal RSP. So Jesse could contribute to Nick's RSP up to 50%, keeping in mind that you have a personal contribution limit. Then the money needs to remain at least 3 years into the plan in order to avoid any attribution rules. And keep in mind that you can over-contribute up to $2,000 without penalties. Okay, then you also have childcare expenses for your 3 children, and these expenses would be deductible in the hands of the lower income spouse, in this case Nick, if he is working in 2016. So the expenses can be deductible if they are incurred to earn income. So in 2015, Nick wasn't working, so this deduction would be available only in 2016. And the expenses deductible would be daycare expenses with the receipts. Up to $7,000 per child under 6 years old, and $4,000 per child between 7 and 16 would be deductible in this case. So a total deduction of $50,000. Next, Jessie said that one of her priorities would be her children's education. So she can set up 3 RESP's accounts for her children. This plan allows for income deferral since the money earned in the plan is taxed in the children's hands. The money invested in the plan would not be deductible. However, the government puts money into the plan, and the lifetime maximum limit is $50,000 per child. Okay, so now let's discuss McShane's personal taxes. There are 2 tax opportunities for Mr. McShane. First, he can invest in another QSBC in the prescribed time, so 6 months, in order to defer a portion of the capital gain on his transaction this year. So we said that instead of investing all his cash into the stock market, he could defer a portion of the capital gain using shares into a QSBC. The other opportunity would be the capital gain reserve. So this reserve is available if JC makes payments within 5 years. So 1/5 of the capital gain would be deductible every year. OK, bon, maintenant je vais vous parler du salaire exécutif, encore une fois. Il est possible d'économiser 183 000 $ en taxes en utilisant la déduction en gain de capital en 2016 pour la transaction que Patrick vous a mentionnée. Ensuite, puisqu'il y a un changement de contrôle, il est possible de transférer la plupart des actifs sans trop payer d'impôts cette année. Aussi, il va y avoir un impact net de 66 000 $ que Marc-André vous a parlé pour PFM en 2016. Et il est possible de payer un salaire annique jusqu'à 123 000 $. Il faut garder en tête qu'il faut que ce soit un salaire raisonnable pour être déductible. Et il y a aussi plusieurs crédits d'impôt et déductions qui sont disponibles pour vous en fait cette année. Nous allons maintenant prendre vos questions. Vous pouvez les poser en français et en anglais, ça va nous faire plaisir d'y répondre. Merci.
Je vais partir de base, juste une question. Comment allez-vous expliquer la raisonnabilité du salaire de 123 000?
Oui, en fait, ça va dépendre du nombre d'heures qui est travaillé. Là, on savait que c'était à temps partiel. Donc, nous, on va regarder sur le marché combien un employé qui ferait le même type de tâche va gagner. Par exemple, s'il fait du marketing ou il travaille plus aux ventes, bon, on va regarder sur le marché combien ces gens-là gagnent sur une base annuelle, puis nous, on va faire une proportion en fonction du nombre d'heures travaillées.
Je vais rajouter sur cette question. On a dit jusqu'à 123 000 $. Dans le fond, ça, c'est pour maximiser la contribution qu'il peut faire dans son RSP. C'est vraiment une question. Après ça, il a le choix s'il veut se payer des dividendes ou des bonus. À ce point-là, c'est son choix.
C'est vraiment pour le RSP et pour le CPP-QPP.
Est-ce que votre conclusion a été différente si la compagnie avait fait moins de 500 000 de bénéfices?
Ça a fait de moins de 500 000.
Est-ce que votre conclusion a été différente si la compagnie avait fait moins de 500 000 de bénéfices?
C'est sûr que là, la valeur de la compagnie, dans le fond, la valeur de la compagnie était surtout basée sur le net income qu'ils ont fait cette année. Fait dans le fond, la valeur aurait été moindre, nos conclusions.
Non, ce que je veux dire, c'est pour le salaire versus dividende.
Ah, le salaire versus dividende? Non, ça aurait été la même chose parce qu'en fond, même si, dans le fond, les dividendes sont moins élevés quand c'est payé par une QSBC, on trouve quand même que c'est important de contribuer dans un RSP qui pourrait maximiser son RSP contribution au lieu de payer les dividendes, puis après, il peut recevoir des dividendes de la compagnie.
Pour avoir le Child Care Deduction, est-ce qu'on est obligé que Nick ait un salaire? Est-ce que c'est...
Oui, en fait, ça va être vraiment quand Nick va recevoir un salaire, donc en 2016. En 2015, il n'y avait pas eu de salaire. Donc, parce que c'est ça, les dépenses pour le Child Care, ça doit dépenser quand les parents vont sur le marché du travail. Donc, en 2016, puisque Nick va probablement travailler, ça va être définitivement c'est toujours le lower income staff.
Est-ce que le fisc regarde salaire et dividende, juste salaire, juste dividende, comment ça marche le calcul?
Dans le fond, ils prennent en compte tout le salaire, dans le fond, tout ce qui est salaire, ça inclut dividendes, ça inclut employment income, ça inclut toutes les sortes de revenus qu'ils auraient pu recevoir durant l'année.
Est-ce que selon vous, ce que j'ai compris dans votre structure, dans le fond, la détention de la société de gestion va être faite directement par Mme Nick, qui n'aura absolument aucune action, ce que j'ai compris dans la détention de la société de gestion? Est-ce qu'il y aurait avantage à lui en octroyer?
À lui octroyer
des actions de la création.
Directement à elle?
À lui, à monsieur.
Ah, à monsieur? Attends, je vais juste penser 30 secondes. Alors, ce serait que monsieur détienne directement les actions à la place. On ne voudrait pas l'avoir directement, juste parce que le point que vous avez renchéri le plus, c'est que justement, vous vouliez contrôler la distribution des revenus à travers les dividendes. Alors, considérant que madame voulait avoir, pas nécessairement toutes les liquidités en place pour repayer les dividendes, repayer le 90%, à ce moment-là, il serait peut-être préférable de ne pas toujours ramener les dividendes taxés immédiatement dans les mains. Ça va donner plus de flexibilité à monsieur, et ensuite Jessie, de son côté, pourra décider de déclarer des dividendes quasiment quand elle va vouloir, et de toute manière, ça va avoir aucun impact fiscal sur monsieur. Donc à ce moment-là, nous, il serait préférable de garder ça dans la fiducie.
Je vais vous prendre un peu de temps peut-être pour discuter du montage, société opérante, fiducie, compagnie de gestion, comment tout ça se branche ensemble.
Bien, ça ne dérange pas, je vais juste remonter. Et voilà, donc, la société d'acquisition BICO va avoir le contrôle sur PFM. Toutes les décisions à la fin vont venir à Jessie de toute manière. Sauf pour les déclarations de dividendes à ce moment-là, la structure pourrait être discutée de manière plus approfondie à ce moment-là si on veut avoir. J'avais mentionné des actions préférentielles, on dit en français, preferred shares, convertible preferred shares, participating preferred shares. Donc ça, ce serait à déterminer ensuite selon la distribution des revenus jusqu'à M. McShane. Il faudrait voir est-ce qu'on préfère avoir des dividendes qui participent, à quel taux on va donner le dividende pour les actions préférentielles. Mais les décisions sont prises à travers la BICO et donc le contrôle revient à Jessie. Je ne sais pas si ça répond à votre question. Okay.
Il n'y a pas un trust là-dessus, par exemple.
Il n'y a pas un trust, non. Non, c'est simplement à travers les compagnies d'acquisition de Jessie.
OK. Est-ce que monté comme ça, Jessie se met dans une position où est-ce qu'elle serait éligible pour la déduction pour gain en capital?
À ce moment-là, ça va être l'appréciable. Elle va avoir payé.
La période de question est terminée maintenant.
C'est